Buonasera, YouTube. Hello, everyone, and welcome. I am back from Europe. I'm back from Italy, and I'm super excited to be here. Literally, in the last few weeks, we have called over 6 figures worth of trades. I'm talking over $100,000 just in the last 5 or 6 weeks, and that's only counting a few of the trade ideas we've discussed either live on YouTube or within our classes, and that is absolutely insane. Again, hello, everyone, and welcome back to the channel where we show you, hopefully, that trading is as easy as you make it on yourself, right? The whole concept here is our insight, your evolution, meaning as a community, we come together, we talk, we hash things out, right? Yes, we look at trade ideas, but overall it's the community. And in that community, you start to realize that, hey, it's really not the strategy. It's not all of the crazy stuff we think it is. It's usually just a very simple approach, consistent rules and consistent management. That's it. So, of course, I am super excited to be here. I've kind of missed my mental stability that kind of comes with working and trading, and that kind of comes with all that. But I digress. I will probably, next time I do something like that, maybe incorporate some downtime more so than I did this time. We'll get to all that another time. So, obviously, before I go any further, I'm going to start with our disclaimer that just says, everything we talk about on here is for educational purposes only, meaning don't trade what you can't afford to lose. Don't take legal, financial, or investing advice from anybody. Me, the guy next door, you know, the YouTuber, the guru thing that pops up on Facebook, none of it. You're 100% responsible for your own account. Whether you're taking signals, whether you're using EAs and expert advisors or robots or algorithms, regardless of where you're getting this from, you're 100% in charge of your money. So if we're 100% responsible and in charge of our money, maybe it's not a bad idea to get a little bit of a better understanding of how this industry works, right? That's the goal, at least. Before I go any further, I'm going to probably keep pushing this out every, couple of weeks to say, because of all the nonsensory with Hugo's Way, yes, I have switched my main broker over to Heroes for now. I also have Henko, LQD, AFX, a couple of others as well as a few regulated ones now. All of those and more is in this link tree. You can scan it below. It's also in the YouTube descriptions. But basically, I still like high leverage. I still like some of the things that unregulated brokers cannot necessarily offer us as an American. So for that reason, I still have some of my other brokers, including LQD, Hero, Envy, AFX. All of those are things that I'm still using across the board. Yes, there is a pretty big transition from MT4 to MT5 going on, I feel like, everywhere. So if you are only on MT4, I would implore you to get a little bit comfortable with MT5, but that is not my job here tonight. Tonight, we're going to go over what we did, literally. I'm super excited, super impressed. We've had a lot of great people doing some great things. So before we show you pip counts, let's talk about pips. Remember, different pairs, different countries, different base currencies, different brokers, all have different ways of calculating this. So for example, when we're referencing a pip, we're referencing specifically from the algorithms and the calculations used on Hugo's Way and now Hero FX. So that's going to vary from person to person, country to country, etc., etc. But at the end of the day, 1% is 1%, regardless of how you're, figuring the pips. If you're risking 1%, you're doing 2 to 1, that's 2%, right? These are all really simple across the board standards. So yes, the pip count might be higher and or lower if you're doing micro lots or what have you. Yes, if you're doing a standard lot, 100 pips is worth an awful lot. If you're doing a 0.01, 100 pips is, maybe not enough for breakfast. That's okay, right? You're going to get there. So now we've defined all that, and now let's take a look. So as I said, in the last few weeks, we literally have made over $100,000 worth of dollars out of the pips and the trades that we've looked at. And I'm talking barely the last 5 or 6 weeks. So some of those includes trades that we've called here. Obviously, something like NZDCHF, that sell played out perfectly, but this buy has just dragged on for days and days and weeks and weeks. Needless to say, we can't control when the market goes, where it goes. We just like to know where it's going and try to come along for the ride, right? Having said that, we've had people make their first 1,000%, literally, that they haven't been able to do something like that in a very, very, very long time of trying. We've had a few people pass challenges. We've had a couple of people hit their first 6 figures, and I know of one person specifically who just quit their job finally after quite a long time in terms of learning how to trade and invest and just being consistent, making sure that all their other net bills are taken care of, and now saying, hey, I get to buy back my time. I get to buy back my freedom. So for that, I am super grateful for everything that we're doing as a community. So huge shout out to all of them. Let's talk about what we did. As you know, I spend our time, whatever. Time is the most valuable thing in the world. going over exactly what we did, and then we look at what's coming. I do that because it's easy to say, hey, this trade played out great, and then you can't see it and you don't know what it did and how it reacted since we talked about it. It's really nice to be able to see it kind of marked up on a chart and say, wait, oh wow, okay, I get this. The good, the bad, and the ugly, and everything in between. So this is a little janky. So we did Halloween day, right? And then we did the week after because I was going to be traveling. Obviously today's the 28th, so now we've got a couple of weeks. As you guys know, we only had about 260 or so when I left on the 7th. This has moved beautifully. So has Euro USD, but we're not counting that any further. Euro USD has moved, I don't know, 500-600 pips, but as you can see on our little spreadsheet, we're only counting 120 because we had considered it closed and done at this point. So we looked at those two on the 31st, and then we looked at those two on the 7th. CADCHF and NZDCHF have both taken their even time. GBP odd, we got that nice little smooth move. We weren't looking for a lot, but we got what we needed. And today, you'll notice I'm going to go through, I'm going to re-add, so we're clearing the board. Going to re-add back on CADCHF because, man, I'm waiting for that move. And, of course, NZDCHF. Some of you guys have been in some of these pairs or in and out of some of these pairs based off of this analysis for days, weeks, and or months, and that's crazy. It's awesome to see somebody track that trade all the way up on NZDCAD and all the way down, for example. It's kind of nice. It makes it where you don't have to do a lot, not a lot of time, effort, energy, or expenditure. You can choose to take a couple of re-entries or what have you, and it's just a really easy way to be. So before I go any further, remember, every trade we discuss on here, the purpose of this 4-hour public experiment is what? It's to say, if you follow a simple system, and it doesn't have to be my strategy, it doesn't have to be so-and-so's strategy, pretty close to any strategy, and you apply reasonable rules that match that strategy. So some rules don't match every strategy, right? And I mean management. It's not that hard to be profitable, right? It's not that hard. Most people, I think, are failing because they're bouncing around from thing to thing, to management, to scalping, to swinging, to this strategy, to this group, to this, to this, to this, and they can't find their way. So this is all predefined intentionally. So what are we doing? We're looking for a couple of trades using the same system I use for my basic trading. I'm still looking at overall technical analysis. From there, I use my little strategy to go find my entry on a smaller time frame if I'm doing this in the morning, and or of course if I'm doing this on these 4-hour calls, I'm only looking at the 4-hour kind of public experiment situationship. So how are we managing? This is predefined, guys. That means you should be achieving comparable results. Maybe not the exact same pip for pip, broker to broker. Maybe I took a few more entries. God knows I did on NZDCAD, GU, EU, and quite a few others. I get it. But overall, you should be pretty close to these ballparks, okay? Maybe not exact, but close, because this is defined. That just simply says you're considering your stop loss at structure on the 4-hour. That can be 1 to 3 fractals back or up to you. Sometimes that's slightly off, but in general, that's a really good place to be. I'm always adding a 1-hour or a 1 ATR cushion. In this case, I'm using a 4-hour ATR cushion. That means 4-hour average trading range. That's how much swing room, spring room I'm giving this to say, hey, if my analysis is wrong, that's how much I'm willing to lose, right? I'm always, always, always protecting, scaling out, locking, trailing, or closing all of or a portion of my trade within about 25 to 50 pips for those of y'all not using ATR. And for those of y'all using ATR, that's a 1 ATR, right? So as I hit 1 ATR, I'm making some kind of actionable decision toward my trade. It might mean I scale out of some of it and on a pullback I get back in, right? It might mean a whole host of things, but I'm always making some actionable decision. My least favorite of them is locking profit. I just feel like it knocks me out all the time. But let's say you hit that 1 ATR, you can choose to apply a trailing stop. If you're using some kind of management like we do, you can apply an exit method that says, hey, as long as price stays above the 50, for example, I'm going to ride this wave all the way up and down, okay? You have a whole host of options, but the point is, take an option. Pick a card, right? Also, for those of y'all who are unfamiliar with those methodologies, I'm suggesting, at least within a 1-to-1, you're making some protective action. If you have a smaller account or you're newer, I would say even less than a 1-to-1, because right now your only goal is capital preservation, not capital growth, right? So, long-winded, I know, but it's been a little while, so we're catching up here. We have accomplished as a community, so 4-hour public trade, all live on YouTube. We've got over 15,000 pips, and that's not even including a lot of indices. Well, I mean, I guess, yeah. And then those 2 indices really, that's an exotic, although that's not worth a lot. Exotic, a couple exotics I think really make the cake there. But you guys get the idea. On average, from where our win to loss ratio is about a 3.8, and I just now am starting this right here in terms of what my actual risk to reward was. Again, this is unfair to kind of keep this in there. So if I keep it in now and I don't take a re-entry, which you guys know I am, and I am still in a couple of these to be transparent. I took another one this morning. Makes a pretty decent difference. But yes, this was let me undo that so I don't mess it up. I'm not keeping it here because I'm still in this. I'm going to maintain that position so it's not valid. But to give you an idea, we're averaging at about a 2.67 to 1 risk to reward ratio. 93% accuracy. This is all live done on YouTube. Not to say you have to be 100%. Shoot, you could be profitable at 70%. As long as you're getting a 2 to 1, you don't even need 90%. You don't need anywhere near that. But I digress. We've been at this about 12 weeks. No, I think I might be wrong. I'll recalculate the weeks. But approximately 3.6 hours is how much time we've spent on this, other than my long-windedness sometimes. And that's it. So that makes your time worth about this much per hour based off of the lot size you're using. That means these pips in general, remember it's speculative because indices and exotics are worth different things, but approximately, smallest lot size, that's $1,500. Took you 3 hours, right? 4 hours. If you're using a 0.1 or a dollar lot size per pip, that's $15,000. So if you're using somewhere in between, you have a pretty moderate, $500,000 account. There's no reason you couldn't have made $7,000 in the last 12 weeks-ish, working only 3 hours. And if people could put that in their mind, this just changes this whole thing. So, last but not least, I added this a couple of weeks ago. Potential growth, right? Remember, pips are great, but what is this worth percent by percent by percent? If you're risking 1% and you're averaging a 2, 3, win to loss, whatever, this is what you're going to have on average. So, to give you an idea, if your account started at $500, okay, your account balance right now would be, if you risked 1%, approximately $1,048. Not bad. If you started with 1,000 and you only risked 1%, you're at 2,000. If you started with 10,000, you've already doubled your money, right? Not a bad way to be. That's what the smallest risk. Of course, you can be risking more, 5% to give you an idea. That's enough to buy, well, not a brand new car anymore. Sorry, guys. Unless it's a Kia. I don't even know if Kias sell for that little, but either way, maybe not enough to get a brand new car, but $500 starting balance, not bad to be able to turn that into, let's just say, $20,000. By the time you have fees in and out and taxes and foo bars and oopsies, cool, you made $20,000. Most people are somewhere in this range if they're just starting out. That is life-changing money. That's an annual salary that we've accomplished literally in a handful of weeks. Not too shabby. And like I mentioned before, we've got all the 5-6 weeks worth of trades that literally cashed out live account to be worth more than $100,000. $100,000 in literally just a handful of trades. Seriously. That is mind-blowing in a couple of weeks. So that's that. I'm not going to harp on this anymore, but let's go take a look. So just to recap, we're going to be closing out all of these. We're going to not keep them on the board. We're going to rebad back in these 2, and then, of course, we're going to add 2 for today. So let's go see what we've got going on. Okay, ladies and gentlemen, so here's where we're at. You'll notice, first and foremost, the purple ones are the ones that we had on previously from the 31st as well as the 7th. And now these kind of bluish ones, aqua maybe, are what we're going to be looking at moving forward. So we're going to start by reviewing, and then we're going to end at those 2. So you'll notice the date down here. I'm going to come back to NZDCHF. So GBP odd, we were looking for the buy. We never came close to this fractal better yet structure. So we did have some drawdown, okay? But overall, we definitely hit the ATR, which is what, 46 pips and or 25 pips. So that's 199-ish pips, give or take. Not a bad way to be. We weren't looking for a very long-term play on this. We talked about it on the call. We were just looking for price to come up into that range. And if I scoot this a smidge over, you'll see we kind of came perfectly into the range that we were targeting. And we discussed live on that call. So we're going to go ahead and remove the board here. Clear all that stuff. We're done with this trade. I'm not looking for this to continue to buy up. So we know what we were looking for. Reasonable risk to reward. It was easy. Easy peasy. Next is my baby. My favorite. Okay. I did phenomenally. I think I did 7 or 8 entries in total, new entries, full-size entries, and that's after scaling out. So remember, if you take a 10% trade and then you close out a portion, and then you take another 10% trade based off of, whatever management style you're using, now the 10% is worth technically slightly more. Your account is worth more, right? So you've got some closed locked and profit and running and running and running. That makes for a very, very good trade, obviously. So I think when we first looked at this on the 7th, we had moved a total of like 260-ish. From right now, we've moved 570-ish. So big, beautiful move. I do think that several of the USD pairs have some more room, but as you can see, they're not in a good place to buy or sell right now. So I'm sitting on my hands. I was actually looking at USDCHF this morning, but before the news, it just tanked. So I sat on my hands for that too. So not bad. But that takes that off the board. Beautiful, perfect, amazing. Let's talk these two. So this one we took on the 31st, right? So the 31st, this is where we're at. We know we're protecting within 1 ATR, 25 to 50 pips. We got that barely. I mean, that's why we manage the way we do. So that's 44-ish pips. We got it. Either way, we did push down and make a new level, right? We did push down, period, across the board. That trade is done. I was still looking for more, I think, when the 7th rolled around saying, hey, we're still respecting the structure. Still looking, but we never got it. So it is what it is. We managed the way we do to protect us from those times. And then, of course, the smaller percentage of times we're wrong. And we can live with that. So taking that off of our board, I'm going to make this blue because we're going to come right back to it. And now, of course, we've got NZDCHF. So we caught a huge portion of the sell. We caught a decent portion of this buy. This has been one of those just, a couple of the pairs have been really easy to trade. Yes, this is obviously a chunk of time to give us an idea. This is from the 10th all the way to, I mean, it was still looking pretty downside. So 3 weeks, it's not short-lived by any means. But here's where we were at. We were looking for the buy. We've technically come up a couple of times, you know, matching our parameters. We knew we were looking for the pullback. We got literally a hair above what we were bargaining for. But overall, this is still within range, and I am still buying this. I'm still looking for the buy, and I'm taking a buy with you guys right here tonight. So we're going to start here and then work our way backwards. We're removing all this. Remove all objects. Big, beautiful, awesome way to be. We're going to make this blue. So now we're fresh. We're clean. Everything is brand new as of right now. So what are we going to do? I'm going to grab my vertical line. And this is just tracking what we're doing. Obviously, we are sitting at kind of a high. So if you want that pullback, you might want to wait. Same thing we talked about on NZDCHF 3 weeks ago, and we're going to say the same thing now. Otherwise, I'm looking for, so green, perforated, meaning I'm looking to buy. Where am I looking for this to go? So I'm going to solidify that so I don't accidentally move it around. For that, I'm going to have to go all the way out to the daily. So overall, we took a hot minute. But I am still looking for this to come up at least into this range. As we come up into this range, I want to see what kind of reaction we get. And if we're going to get the spring that kind of just comes in here, or if we're going to continue to pay off this entire W. That's going to be a hefty amount of pips, to give you an idea. So even if you're way down here, which you're not, okay, coming up into this range, you're still looking at 180, 190-ish pips on a pair that's worth slightly more than the US dollar pairs, right? Not bad at all. So I'm looking for price to come up into this range before I make any further decisions. I want to see us break this high, solidify, and retest before I know if I really am going to keep holding this. Otherwise, we caught here, and we caught a baby amount of here. Baby. Caught a lot of here, too. So we'll see. Back to the 4 hour. This is trade number 1. I'm going to zoom out, make the candles a little bit small. Ta-da. We shall see. So things have been trending really, really nicely. I definitely would be looking into this trade first and foremost. That's a buy. NZDCHF, 4 hour time frame. Most recent fractal is here. So CADCHF. Ugh. Baby. Listen, this has been a ton of fun. Got our impulse, got our correction. Made a slightly higher high. We wicked down and cashed out all those orders this morning. We have this nice little rounded kind of formation. Some might argue a few different formations. I'm going to keep my nose out of those arguments and say we've got our 4 hour trade idea. Okay. We're sitting at structure. We came down and kissed those huge levels. Okay. So what am I looking for right now? I'm looking to buy this literally active buy. So that price point is what? 6470. 6470. So as we move up, that's when I hang up this YouTube, that's what I'm going to do, is go type that in. So not a bad way to be. This is what I'm going to be looking for. CADCHF has also a boatload of room. So I'm looking for price to come up into this range before I make my next decision. So I want to see how we react when we come up into here. We're going to get some kind of a reaction likely here, but I'd like to see us break this level, give us that pullback, and come quite a bit further. So in total, this has a ton of room overall, a ton. So not a bad way to be. CADCHF for the buy. And let's go take a look. Before I go any further, please notice there's quite a few correlations here. So if you decide to sit out, please pick your battle wisely, because there are 3 chef pairs here and 2 CADs. So mind you what you kind of favor toward, mind you what your own risk parameters are in terms of over leveraging per currency, because this would definitely qualify as being over leveraged per currency. So this is now CHFJPY. That's the 3rd chef pair of the night. Unfortunately, in the time it's taken us to make this, it's moved a little bit further from where I wanted it. I was looking when we were breaking that fractal. Yes, I'm still looking overall for this to sell. So there's quite a few other JPY pairs too. Euro JPY is not bad. Odd JPY is not bad. I'm in odd JPY already. But let's take a look. So looking for this to sell. We're going to get a reaction in around here, which does not give us a lot of pips, but it does give us enough to follow the rules that we already have set in advance to say if all we're getting is that 1 ATR, is that enough? Yes. 25 to 50 pips, is that enough to make this a solid in the right direction trade? Absolutely. So that's where we're at, looking for the sell on CHFJPY. And now EURCAD. EURCAD again, since the time of looking at this video, we had this nice little pullback. This is EURCAD. Don't love how it's pulling back at this very second. So we are going to do a pending. All of these are pendings because it's the only way I can kind of manage all of this. But what am I going to do? I'm going to put my vertical line on the candle prior to the one we're on. Did I do that on Chef? I did. Just making sure. Just double checking my T's. So this is the actual candle we're on. We're not going to do that. We're going to come over one. Ta-da. I'm going to place my sell pending at the base of this fractal. So if and when price continues to move to the downside, you can decide that, hey, these pips are worth saving. So to give you an idea, the difference between you entering right now and entering where I'm entering is 26 pips. If you have a, one standard lot, that is not nothing. That is a lot of money left on the table. So at the end of the day, it's going to be up to you. Mind you, structure, our most recent fractal in general is still way up here to kind of give you an idea. So I think we've got a little bit more room to kind of push up. As long as we're staying below this trend line, this analysis is still valid. So I'm looking for that sell. If all we're getting out of this is that little initial retracement and not the reversal, I'm still looking at the potential of 130-ish pips. Not bad. If all we're doing is wicking up into this area, we've got that 45 to 50, which is what we need anyways. But if we go to the bigger time frame, big, beautiful move. We did break this trend line and we retested nicely. And that's where I was looking before this call kind of started. So now it's just a matter of, are we going to get the continuation? Because we've got the break and the retest. If we get the continuation, great way to be. If not, you'll sit on your hands and you'll skip it. So this is only going to activate if we continue to the downside, right? You also have the option, if you are already a manual or maybe slightly experienced trader, you can use any strategy you choose. Go to the 5, 15, 30. This is not an index, so I probably would stay off of the 5 personally. Maybe the 15, 30. And as you get a 15 or 30 minute entry based off of your technical analysis, based off of your golden strategy or your Ichimoku or whatever it is you seem to favor, super trend, right? Whatever it is, by all means, take your entry in conjunction with this analysis. It just makes a super easy way to be. So not perfect. We're going to take some losses. We have, unfortunately, too many blues in a row. And that doesn't scare me, because when you get that, it sure is nice that you have, I have a month and a half with no losses. We have that on ours too. And I know that's super YouTube worthy and all that good jazz. But the reality is, a month and a half of no losses just means you've got a loss coming up, right? The law of averages is going to come in and you're going to take your loss. So that's totally okay. Plan on it, plan for it. If you're doing consistent risk, it's not going to matter. And that's it. So next, YouTube, I've got a pretty big announcement for what we've been able to accomplish within all of these live trade ideas that we've been doing for years and years and years. I'm super excited and super honored for all the people within our community. So I can't wait to talk about that, and maybe a little bit more about Venice and Florence and just all the beauty that is Italy, for example. But I hope you guys all have a beautiful Tuesday. It is the holiday season, so please be mindful. Money is leaving the market, which means we shouldn't be throwing our doubles in because there's not enough money there. So it's going to trade a little bit different when the volume is going down. Like it's going to be going down between now and maybe the first couple of weeks in January. So great time to practice your scalping. Great time to practice that risk management of just, sitting back and letting it run a little bit and kind of capitalizing on some of those swing moves, but definitely not over leveraging and definitely not over trading, because the volume is going to be a lot more fundamentally based and a lot less predictable maybe. So that's all I've got today. Happy Tuesday. I hope these videos are helping you. If they are, please make sure you like, comment, share, and do all the things that helps the YouTube algorithms and help me continue to provide this kind of content to you. So happy trading, happy Tuesday, take care, and God bless.